Most people think leaders run nations. The truth? Money often runs them instead. For centuries, a few powerful banking families have quietly controlled economies, influenced rulers, and even funded wars, all while growing their own fortunes. Banks aren't just neutral institutions where you store cash or take loans. Behind the scenes, dynasties like the Medici, the Rothschilds, and the Morgans built networks of power that let them pull the strings of entire countries. Understanding their methods isn't just history. It's a lesson in how true influence works and why simply having money doesn't make you secure. Let's start with one of the earliest and most famous examples, the Medici family in Renaissance Florence. By the 15th century, the Medici had transformed banking into a tool of influence. They didn't just hold deposits or issue loans. They financed kings, popes, and merchants across Europe. With every loan, they gained leverage. When rulers needed funds for war or expansion, the Medici could demand favors, seats on councils, or political appointments. Florence itself became a Medici city. The family's wealth underpinned art, culture, and government. But their true power wasn't just in gold, it was in control over credit. They knew that whoever controlled money controlled decisions. Those who failed to repay weren't just in debt, they could be politically isolated or even exiled. Move forward a few centuries, and the same pattern appears with the Rothschilds. By the 19th century, this family had banking houses across Europe, in London, Paris, Vienna, and Frankfurt. Wars in Europe were expensive, and governments relied on private financiers to raise funds. The Rothschilds became indispensable to nations because they could move money across borders faster and more efficiently than treasuries. They financed the British during the Napoleonic Wars, lent to Austria, and helped rebuild economies after conflict. And because their networks spanned multiple countries, they knew things governments didn't. Intelligence, influence, and access became as valuable as the money itself. One branch of the family could subtly nudge politics in one nation, while another branch protected their interests elsewhere. Wealth alone didn't grant them this power. It was strategic value combined with capital. The early 20th century shows another example of banking dynasties shaping global politics. Families like the Morgans in the United States weren't just financiers, they were the backbone of industrial expansion. J.P. Morgan's influence reached from steel and railroads to the U.S. Treasury itself. In 1895, when the U.S. gold reserves ran dangerously low, it was Morgan who organized a private syndicate to lend $65 million to stabilize the government. Suddenly, the line between public authority and private banking blurred. Citizens think governments make these decisions, but in reality, private money dictated national survival. Those who understood and controlled capital could steer the fate of nations. Here's a question for you. Wherever you're watching from, do modern governments truly act independently, or are they still shaped by financial networks operating behind the scenes? The structures have changed over time, but the core principle remains the same. Money has always been power, and those who control it can influence decisions at the highest levels. Take the Bank of England as an example. When it was founded in 1694, it was essentially a private institution. The government borrowed heavily from it to fund wars against France. This wasn't an act of generosity, it was leverage. Bankers could decide whether to extend credit or withhold it, effectively shaping policy choices, and in some cases, even the fortunes of rulers. The appearance of an independent government often conceals the subtle realities of financial influence. The lesson is timeless. Governments rely on credit and capital to operate, and those who control access to that capital hold a form of indirect power. Understanding this dynamic helps explain why policy, debt decisions, and economic priorities sometimes reflect not only political considerations, but also the pressures of financial networks few ever see. Influence, like currency, flows quietly, but its effects are undeniable. Take Germany in the late 19th and early 20th centuries. Banking families like the Warburgs had stakes in both industrial enterprises and national finance. When World War I began, these networks funneled capital to support war production, influencing which industries thrived. After the war, during hyperinflation, families with international holdings and diversified assets weathered the storm, while millions of ordinary citizens lost savings overnight. Those with control over liquidity, credit, and production were not just wealthy, they were secure. History is full of examples where access to money alone couldn't protect you, only strategic positioning did. Even in modern times, banking dynasties leave their mark. Consider the power structures behind central banks. The Federal Reserve in the United States, for instance, is a network of private banks that issue currency, set interest rates, and influence the economy. While government oversight exists, the mechanisms themselves are controlled by private capital. This gives those who understand the system the ability to predict, protect, or profit during crises. The 2008 financial meltdown is a perfect example. The families and institutions that anticipated leverage risks, understood derivatives, and had diversified positions survived. Millions of others were left with overvalued assets and mounting debt. It wasn't luck, it was knowledge, preparation, and strategic capital. So, what does this teach us? First, money by itself isn't the real source of security. The Medici weren't just rich because they had gold. They were influential because they knew how to make money a tool for control. The Rothschilds weren't just wealthy. They could move information, funds, and influence across borders faster than any government could respond. J.P. Morgan didn't just own assets, he orchestrated stability for an entire nation during crisis. Wealth without strategic positioning is fragile. Influence and control are enduring. Second, history shows that crises often emerge when people chase illusions of wealth. Most individuals focus on what's immediately visible, their paycheck, the family home, or a stock portfolio. These are tangible, easy to track, but they don't always capture real financial resilience. Meanwhile, banking dynasties and major financial actors operate on a different level. They study systems, networks, and leverage, knowing that control over the flow of capital grants influence over economic outcomes. Credit, investments, and liquidity aren't just tools, they are levers of power. This influence extends far beyond markets. Governments, policies, infrastructure projects, and even wars can be shaped by those who hold these financial levers. The ordinary observer may see only surface-level events, but those with control over capital see the chains connecting resources, decisions, and consequences. Ignoring this dynamic leaves both individuals and nations vulnerable, often unprepared for the shocks that history has repeatedly demonstrated will come. True financial awareness requires understanding the unseen systems shaping visible wealth. Finally, this isn't just about fearing shadowy elites. There's a lesson for building lasting security. Diversify not just money, but the forms of influence and value you control. Owning productive assets, acquiring skills that are in constant demand, understanding how money moves through systems, these are forms of value that survive economic storms. Banking dynasties teach us that resilience comes not from how much you have, but how effectively your resources interact with the world around you. History has many warnings. Florence, Europe, America, Japan. The names change, the lesson remains. Those who rely purely on apparent wealth are vulnerable. Those who cultivate real value and understand systems endure. Money is powerful, but knowledge of its flow is what separates the temporary from the permanent. Understanding these dynamics isn't just academic, it's practical. Next time you think about money, ask yourself, am I building numbers on a statement, or am I building influence, resilience, and real value? Because the answer determines whether your security is an illusion or a fortress. If this gave you new clarity, hit subscribe and stay connected. We dive into history, money, and power so you can see beyond the surface and make smarter choices for your future.